Hello everyone. Hi, hello, vanakkam and welcome to Stocks and Profits. So this will be a weekly analysis. Hi Sundar. So this will be a weekly analysis on both Nifty and Bank Nifty. So I will be sharing a few key important data levels on Nifty and Bank Nifty as well. So I will be revealing the institutional positions that are there, and we'll also be seeing one of our most favorites, what Nifty is speaking to us as per the price action data. So as you can see under Nifty, we will be seeing the candle data, and we'll be looking at what level of Fibonacci is currently Nifty is standing by, and what is the trend that is setting into Nifty. We are going to look the trend for both the October series, which is going to be the full monthly series of 26th October, and we are also going to see this 12th October of Nifty's expiry and the 11th October where Bank Nifty is going to expire. As you all know, Bank Nifty's expiry has changed to Wednesday, not Thursday, and Nifty expiry is still sitting there tight on the weekly expiry is still happening on the Thursday. So we'll be looking into that data, plus we'll be adding RSI into our Confluence to look through where Nifty is actually heading on to, and we'll also see if the candles are trading above the 200 or the below the 200 EMA. Plus we'll look into the option chain as per the FII's position. Now I have been actively posting and I have been actively telling into the channel and into the source that Nifty is into a very good range bound channel. So as you can see, this 28th September we are sitting on the daily time frame of Nifty. Now if you could see here, just give me a moment. Hi Dinesh, hi Sundar. Let me just pull up the pen here. Right. So if you can see here, this 28th September was a very bearish day, and Nifty almost fell a 1%, which is very close to 190 points on this specific day. So now what happens after that is that it came back to the demand level that was created very close to the August end, and it kissed that demand level with a dragonfly doji. So usually, if you would have known, dragonfly dojis are the most powerful reversals than any other bullish patterns that are existing here. So after a dragonfly doji, it was a gap up for day one. The market tried to keep a doji candle, and again last Friday was again a gap up. And as you can see, volatility was completely full on for these 2 days, for both these 2 days. Now how do I say that volatility is this? If you just go over to the 5-minute or the 15-minute data, you would see the Nifty would be pulling up, again it will be pulling down, and again it will be pulling up, and it will comfortably close just above or just below the opening price, forming a small body with a good wick at both the top and the bottom. So that is what has actually happened here. If you look at the Thursday's data candle is this, which again means that there is no sort of good bull power that is existing, that has eminently, that is not seen in the market. And also if you look at the Friday's data is also something similar to this, but eventually these two candles are happening after two gap up range bounds. Now like I said in the previous video, this was a 3% up move, and again from this was a 3% down move. So if you could collect all these data, and if you could combine and look at, it was a 3% up and it was a 3% down, and if you just combine all these two, you would again get an indecision candle if you just combine all these candles on a very higher time frame. So what does that mean? What does that mean for us for this coming 12th October expiry for the Nifty? As you can see, I've been telling and posting in the Telegram channel, this low of 19,488, this low is very important, and 19,766, this high is very important. Reason being, one, they are very good round numbers, they are very good magic numbers, and two, it actually forms the highs and the lows of this September 28th candle. So unless or until if Nifty is breaking above this candle, there will be no bullish if Nifty is staying below between these ranges. And if at all Nifty is closing below here, we have a very safeguarded place of 19200 for now. So this is the very safest the support that Nifty is currently holding on to right now. Now, like I said, it is going to be range bound if Nifty is sitting within these two levels. So that is what at least price action is saying. Now that we have looked into the price action, now I will take you to the trend and I will check you. So for this space, I would switch over to a very good higher time frame, because when you are starting to analyze the trend, it is always better to switch to a higher time frame so that you can get a very good better idea. Now, looking at the trend, this was our previous swing high, and as you can see, the previous swing high was broken, I should say very close towards the June end week. So this high was closed at a very good bullish candle. If you would have seen the imbalance webinar that I had taken in my website for free, so it created this space where the previous swing high, this was the last swing high, and it broke that swing high with good momentum. It broke that swing high with a good imbalance candle, forming a range of good order blocks at 19,000 to very close to 18,500. So Nifty tomorrow coming back to this range, only if and only if it is bearish. Nifty tomorrow coming back to this range, you can expect a bounce at this level, which is nothing but the 19,000 to 18,500. So now, keeping in mind that this high has been taken out, obviously a retest can possibly come. Now, there are interpretations into the market. Some are wrongly guiding people who are there in YouTube. Some are wrongly guiding to the other people, the retailers who are watching the YouTube videos. What they are saying is that this is a probable double top pattern that is in formation. I don't disagree with them. Of course, market never expects or market never plots the perfect double tops. It will never happen. Sometimes the tops are high, sometimes the second peak is very low. All these are good double tops in the market. Now, what I want you to understand is that not all double tops will go on a bearish mode, because double top is a bearish signal that is going to step into the market if at all the neckline of the top double top is being broken. Second thing, we have a very strong dragonfly doji on the first series of October. That too, it happened on a lunar date. So what is a lunar date? Lunar date is nothing but this happened on a full moon day. Usually markets tend to be bearish on a full moon day, bullish on a full moon day, and it tends to be bearish on a new moon day. If you are a new subscriber, if you are a new viewer to the Stock and Profit channel, you might know how we are very closely relating with the moon phases with the stock market. If you can just go ahead and see, somewhere close to the 15th or the 16th of September, there was a new moon. New moon is nothing but Amavasa, and this full moon is nothing but a Purnami or the Purnima. So markets tend to be taking support, one, from this demand level, two, it has a good dragonfly doji, three, it was formed on a full moon day. Now let's head over to the price action. Let's head over to the Fibonacci's and see how far the retracement has happened and how far the short covering is going to go for. Of course, if you don't know what short covering is, short covering happens only in a downside trend. So this is a short position and this is the covering position, which is nothing but they are covering their short. Right? So this is the short position, this is the covering position. So this could probably be the covering position. And I recently shared one of the money controls post about Nifty, that Nifty can probably head over to 19,800 is what they have been posted. 19,800 is nothing but it's very here. It's very close to our region, which is again falls into the range bound levels. Now, if you have been a consistent member of Stock and Profits group and the team, you would have heard the word NTZ or the kill zone. So this is where a lot of retailers will be buying options, and they would be the theta decay will be so heavy that they will be losing every time money in the options, because this range is an NTZ. NTZ is nothing but a no trade zone, or a it's a kill zone. So of course the price action data is still matching with the money control data, where they said that they can see a rally for 19,800, which is nothing but 150 points away from the closing price. It's very near. But like I said, the support is very imminent. The support is very strong here. If at all Nifty has to breach this, there has to be a very strong candle, bearish candle closing below this levels of 19,222. Now it's time for me to take the Fibonacci and see how far the fall has come. So this was the last swing high. I'm gonna pick this high. This was the last swing low. I'm gonna see here, and I'm gonna connect these two spaces, and I'm going to see how far the retracement has been coming up. As you can see, we currently have a rejection at 0.38%, which means whatever the shorts that has been done here, so 38% of those short positions have been covered. Again, it still falls under our range too. 19,766, 19,780. This is nothing but the 50% levels of from this swing high to this swing low. Again, let me say that this is the swing high and this is the swing low. So the 50% level matches with our level that is being marked here. So this is high time, very high time, that I want you to watch three things, or at least two things. One, go watch the global cues that are there. And two, watch if it is a gap up opening or if it is a gap down opening on every day, because this is going to be highly efficient and highly crucial if you are on an intraday or if you are on a swing trading mode. Of course, if you are a long-term investor, you shouldn't be worried about whatever is happening currently here, because as you can see, Nifty is in this range is what I would say. Nifty is sitting tight within a 20k to 19,200. That's an 800 point range that the institutions are playing. It went up, it came down, again it went up, made a new high, and it came down. So it is still sitting in this range. Unless or until there are no news, Nifty is not going to react very close to it. Some say that FIIs are exiting their positions due to the the global equity crash. The American markets are not doing good. It's fine, let it be. But this time, what I personally feel is that the Indian markets are going to act differently to that, and there is clear evident data that the US folks and the FIIs at the US, what they are doing is they are pulling out the cash from the equity market and they are trying to park it into the bond market, which is where you are going to see that the bond market's yield are hitting a 16-year high, which is a historical number. So these are some macro data that is going to drive the market in the upcoming days. Of course, one of the major three key things that are going to happen, that are going to be in focus for the next upcoming months in the Nifty, is that one, it's a season. It's a festive season. Diwali is going to come. New Year is going to come. So a lot of stocks can be related to this season. And second, concentration will be more towards the railway budgets. And number three will be focused towards the union budget. So these are going to be important trigger points into the upcoming days. Reason being, the RBI's rate has been paused. It was not raised or it was not let down. They are still maintaining their rate for this time too. So next RBI, until next RBI meeting comes, it is best that you watch the global cues along with the seasonal stocks that are going to come. So like I said, 50% is very important for the fall that had happened from this swing high to this swing low, and this is a very key area for this market. And 1976, only upon if this range is taken out, then only Nifty is going to be bullish. I had to say this time at this point of time, we are not SEBI registered. That I just wanted to put this disclaimer while we are going to still have the bank Nifty to do. Now that we have seen trend, Fibo, candle, and we are going to see the RSI data. Now if I add RSI over here, all right, let me take the RSI, I don't mind. Nifty daily time frame, and if I go over and check the RSI, so RSI itself, we are sitting very close to this 40 and the 50 levels. So I would say that these are not the levels where we are not seeing any sort of directions, and RSI is still sitting bearish. So we are not supposed to be taking any sort of decisions when RSI is at yellow. So unless or until RSI crosses this moving average and it turns green, only then it will give us a good go ahead signal for possibly to maybe towards 20,000, because there is a gap up there in 20,000 and we do have a good order block here at 20,000 also, right? So RSI data as of now, it is sideways. It is going to confuse a lot of retailers. Like I said, this is a good kill zone that it is sitting. So if I could, yeah, this is a kill zone. 1976 to 19488, it's a kill zone. Don't get trapped, keep your positions light. Now if I add over the EMA data, so 200 EMAs is one good clear direction for us where it could reveal us the positions of the FIIs. So if I had 200 EMA data and if I add it, yep, we are still comfortably having a good space between the price and the EMA. Now price action wise, I could very well draw a trend line over here at this space. So I could even draw it from the trend line itself. So if I could add this line, so it is probably touching these points, and yes, we do have a good support over here. Next time, if the price is coming towards this trend line, I'm not sure if it is going to hold or not, because there is already been, the price has already moved away, very well away from the 200 EMA. Now where is the 200 EMA is being plotting? 200 EMA is sitting tight on 18757. So now we have, I told that we have a good fort of holding support at 19200. Unless or until 19200 and this this support level is broken, we cannot expect the markets to reach around 18800 ranges. So this is the very tight range if the market is going to go for a dip on the downside, but that will not happen anywhere near soon unless or until a black swan event happens. Cool. So we have seen the RSI data and we have seen the EMA data. Now it is high time that I take you to the option data, where we are going to see where is the build up that is happening for the FII. So what I'm trying to give you here is, if you are an index trader, if you are trading on index, let's say Nifty, Bank Nifty, Fin Nifty, mid cap, this is one such good thing of good practice to analyze your data. So first look at candle, then take the trend, then take the Fibo data, check what the RSI is, and then go ahead and check the 200 EMA, and then come to the FII, and there should be sort of correlation that should be setting. There should be like the confluence on increasing of odds that should set in. If you are able to see that, only then you can have a clear direction. If you are just seeing any one of them, then you have a very less probability of winning those trades, right? So Nifty, for now, I'm going to straight ahead for the 26th October. A long view is always good to watch here. And as you can see, if you are seeing it, so 19500 is where the strongest call put writing is present at 19500. Now where is 19500? If I could zoom in here, sorry. This is 19500. This is very close to that bar range where I marked as 19488. It is just 12 points very below to the 19500 range. Again, This is the strongest institutional support for 26th October itself, the monthly expiry itself. Now, if I look at the call side data, what is the strongest OI writing, call writing is happening is at 20,000. So now what is the market range for this October? Market range is probably from 19,500 to 20,000. So the institutions are expecting that the market is going to be within this range 19,500 to 20,000. This is the range that they are expecting, which means they are into a hedged position, or they have a highly sold that they might have sold the 20,000 calls and they would have sold the 19,500 puts. So wherever the market expires between 26th October, it's a good win for them. So that is what can probably happen. But the highest resistance as per retailers, for to make things easier, the highest resistance is at 20k for October alone, and the highest support is at 19,500. Now what I am trying to do here is I will come live on every Saturday evening or Sunday evening, and I will try to update this position as the every day changes and every news comes out changes, and obviously the positions of the FIIs will obviously change. So if there is a change in data, we might be changing the support and resistance also. Cool. So this is the OI data for the whole month. For the whole month, what are you going to expect for Nifty? You are going to expect Nifty only at this range. Not over here, not over downside, but only between these ranges. This is where you can expect Nifty to be into the play for the whole of October. Now, getting back to the coming 12th October, which is the Thursday's expiry for Nifty. Where can I see the highest support that is being built? Highest support very close to the price range, very close to the at the money. The highest support is building at two places. Again, it is at 19,500 and it is at 19,600 also. So 19,500, and I would mark this as 19,600. Now this support is only for valid till coming Thursday, and this data will definitely change. So what I'm going to do is I'm going to change this color and I'm going to maintain this chart for the next week's purposes. So 19,600 is the support for the upcoming expiry. And if I take you to the call side, on the opposite side, again the highest support call rating is at 20k, which is matching to our monthly levels of 20k. So 20k to 19,600 is going to be the probable game for Nifty as per the OI data. But the immediate highest call resistance that Nifty is going to see is at 19,700. Only then if it is passing, then 19,900. So I should do that. So 19,700 and 19,900. So if at all Nifty has to reach 20k again, where there was a gap when it fell down, it has to surpass 19,700 first. Option game is a very OI data is a very good game. 19,900. If you can identify the institutions, you can very well, you are winning the game almost half before even trading. So 19,700 is the top level resistance for now, and 1976, 766 is the price action resistance for Nifty for now. And if at all the Nifty is crossing, the first resistance that you can expect for Nifty is to head at 19,900, right? So this is the option data for the Nifty. Now, if I shift over to Bank Nifty, what is going to happen for Bank Nifty on Wednesday? Highest call rating is at 44,500. Now, if I shift to Bank Nifty, let me delete this. What is the highest support? 44,500. 44,500 is the highest resistance for Bank Nifty. The support is at 44,300. Where is 44,300? I would mark 44,300 as the highest support for Bank Nifty. So for this coming week, Bank Nifty is sitting tight on a very close range, very close range. 44,500 being the highest call option rating, and 44,300 within this 100 point. I'm not sure how this data is going to change, because I'm not seeing any sort of higher OA rating in the downside anywhere near, except very far OTM of 42,000. Imagine 42,000 is 2,000 points away from the current price, which is over here. So this is the highest put rating that is happening. If I go over and see the highest put rating after this level, that is going to be 46,000. 46,000 is way over here at the top, very close to the supply. So again, look at price action. Price action wise, what is happening? Take this candle. If I just hide this, I can very well easily show you all. Right. So look at price action. Again, same case for Bank Nifty also. If you can see, Bank Nifty will be range bound from 44,800 to 44,300. Until this range is not broken, you are not going to see any sort of movement into Bank Nifty. So only opportunity here is if you are trading into Bank Nifty, be a scalper. Be a scalper, try to scalp and keep your points very low, try to scalp for a quick points and then try to exit. You can see directions only above this point, and obviously same like Nifty, we have a gap at Bank Nifty and there is a good supply zone that is waiting at 45 to 100. So Bank Nifty is very same and similar to that of Nifty. Like I said, from the last position, we can very clearly see a double top pattern forming in Bank Nifty, and it is sitting at the neckline. So I will be worried only and if only if 43,500 in Bank Nifty is taken down. Only then Bank Nifty will turn into as a bearish mode. But for now, if you could see the data that is there, so it is very well above the 200 EMA. And also if I take over to the Bank Nifty daily time frame, so if you could see here, so the RSI is very close to the 40 levels. So we have always told you, after it is breaching 40, it could increase its momentum. So we are in a waiting state for Bank Nifty. There is no clear direction. But Nifty, we can see that the put writers have gained their position at 19,500 and 19,600. Bank Nifty, we still need more clarity. Now, last thing, if I take you to Bank Nifty's October expiry, 26th October, highest put writing, where is it happening? Highest put writing is at 46,000 and the highest call writing is at 44,000. Where is 46,000? 46,000 is here. This is where the highest call writing, and 44,000 is here. So again, the support of price action and the institutions are the same, and 46,000 is the highest resistance for Bank Nifty on the top side. So these are going to be the levels for Bank Nifty. Of course, if you want the Fibonacci data to be seen here, as you can see, click here, and if I see here, so it is sitting tight on a 23%. Only 23% of profits have been booked until this short, and I would say the downtrend is still there in Bank Nifty. I don't see any sort of at least short covering rally has been initiated. No, Bank Nifty is still sitting within this trading range. As you can see, this is still sitting within this resistance line, but that is not the case for Nifty. If I go over and change the chart to Nifty, this trend line, this resistance trend line, if I go over to a 75-minute data and hide everything, so if I zoom out, this resistant trend line for Nifty is really essential. So if Nifty has to be bullish, it has to cross this resistance trend line. It has to cross this 19,700 or 19,850 in order to take the data take the orders from this gap 1 and this gap 2. Again, this is the last swing high. Theoretically, Nifty has to cross this with a good close and cross. If the bulls are not sustainably closing after this expiry for Nifty at this level 19,800, then we might not be seeing some sort of bullish moves unless or until the option data are changing. Cool. So again, we would like to say, it's a disclaimer, we are not SEBI registered. Please to consult your financial advisor before investing. So this is the Bank Nifty and Nifty's data that I wanted to share. So please do stay safe in this market. Market is completely news and fact based. So don't lose your money if it is not a right day to trade. If your instinct says that it's not a right day, don't trade. Save your capital. All right. So thank you for watching Stocks and Profits. Stay tuned, stay safe. See you all. Bye.